Hello friends, good week. How are you today? This is the weekly review for 5th of May 2013. Well, last week we expected very interesting week with a lot of moves, and well, the trading was very volatile, especially closer to the end of the week, thanks to the non-farm payrolls report. As we saw, the report showed that the job market in USA keeps recovering. Still not as everyone expects, still below 200,000 jobs added every month. Last time we're getting closer and closer. 165 new jobs were added. The unemployment rate is going slowly down, but it's going down. So such news have good impact on the markets, and we saw the indices. Let's put one of them in front of our eyes. You can see that, for example, the Nasdaq pushing to new highs. With the current push up, we just need to remember that the pressure on Bernanke is growing as well. We already heard many voices saying he must stop this unbelievable purchase, right, of the bonds. And Bernanke just last week said, "Don't know worries, we're about to continue," but he himself said that once he will see that the unemployment rate is improving and the job market is improving, he will consider to stop it. It's still far from being 6.5% as he aims to, but the debt that keeps growing because of the printing could change the rules. Of course, it's not going to happen very fast. Of course, not. This is not to happen from today to tomorrow, right? It's something he has to think about, and probably as he came up with the QE, with the official announcement, this will be also an official announcement and not something unexpected. So what do we have on the markets? Well, first of all, about the indices. If I started with them, I will continue with them. I was wrong with my expectation, and that the drop is coming right from here, from the last highs we have had. If it's Nasdaq and if it's Dow Jones, which I expected around these levels to start the drop, it keeps pushing, and right now reaching very interesting levels. I was wrong with the timing. I am sure that I'm not wrong with the direction, and the reason for that is very simple. First of all, the real numbers on the real market are losing the indices. They are losing this rally. No company is doing as good as the indices represent. This is fact number one. Fact number two, I'm not a big economical professor, but watching on the charts, looking back on history, that's what we can see. For example, let's take the Dow Jones. Normally, we saw that May, right after May, we got corrections. There are only few times that we did not get a good correction, and we got a drop after that during summer. It was here in 2011 that the fast correction recovered, and then we got a drop down, and that was in 2007. That after May we still pushed higher, then we got small correction, then double top, and we all remember to what it led. Now, watching on a weekly chart, we are under continuing divergence. Watching on a weekly chart, RSI is playing around the top. Watching on a monthly chart, there is a monster divergence forming, and yet RSI is playing around the top. This is very bearish sign for the long run. For the short term, I would not be surprised if they will try, all the indices will try to push a bit more, but as I said for a few weeks already, the higher the worse. Right now this party looks seducing one to join, right? Everyone wants to be part of that. But remember, when weekly and monthly divergences are shown, the crash down could start any moment, and that's what you have to be protected from. That's my opinion, of course, about the Dow Jones, which is the one of the main, and the Swiss market. From my point of view, the Swiss index is probably the best one, and there are two reasons for that. One, let me show it here; it will be clear. We have a bearish hidden divergence between these two highs. Two, we got here, as you can see, duplication of this move, a bit more even, right? Three, all this could look like a head and shoulders. Four, we got a monthly Bollinger Band duplication. Five, we have resistances areas. Six, we have a weekly bearish divergence, and we got more than 20 candles, right? This is a weekly chart, so such thing takes time. Last time it happened was here. That was the continuing divergence that keep going and going and going and going and going, creating the divergence. RSI was not even at the top then, and we got a drop down that was pretty serious, and that happened in 2009, 2010. Right now we're still moving on the upwards, but and that's a big but, the crash down could start any week, anytime, and that's you have to be prepared for. Last time we got 20 candles right was here. After that we got a small correction, pretty much of 1,000 points only, which means if we get 1,000 points from here, we will back to this range, okay, around the 7,000, maybe a bit higher, okay. But don't forget that after that we got another push up, and we all remember what happened in 2007, 2008. Now, as I said, if the current rise will continue through May, June, and maybe July, then unfortunately I think that the summer, the end of the summer and the autumn will bring something very, very bad to the market. Maybe that will be the time that when Bernanke will announce he's going to stop with his crazy QE, quantitative easing, right? Maybe that will be exactly the time. But the markets are building something. Looking on the S&P, the divergence is here. RSI is playing around the top. Looking on Nasdaq, same story. Monthly divergence is unbelievable. Looking on the Dow Jones, same story. It doesn't matter where you turn it, it's all so the same. There's one thing I want to talk about before I finish, and that's the DAX. DAX was probably the fast created with the fast action during Friday and pushing to the new high. But take a look. This is a weekly chart. We got a bearish butterfly on a weekly chart. Still, we have more to go. It looks like the Nasdaq could reach 8,300, could reach 8,500, maybe even will try to push to around 9,000 or so. But again and again and again, we are coming to the weekly divergence here and the extreme. We are coming to the monthly, divergence and extreme over the top. So, from my point of view, there is still more to go. I think it could and should still push here to the next top, and all of them will end bad. So again, I admit I was wrong with my timing, but as I said that several weeks ago and repeated that right after that, it's like an investment, exactly like you buy indices from the bottom. Same here, okay, a short, and I'm proud to say I'm holding my shorts right now. Yes, I'm holding a drawdown, I'm holding a minus, but this is an investment for a long run based on weekly and monthly charts, and something very big is about to come. When exactly, I have no idea, and I don't want even to predict that. I hope it will happen in May and June, because then it could be only a small correction. But if it's not, it could be bad, very bad. And don't forget my opinion. Dow Jones and all the others could go first of all back to this trend line, which means 1,000 points or so. And right after that, I would not be surprised if they will break it and take us to the level where divergence started, and that would be here. 1,500 points drop down then. So be careful there. And now let me show you another important. This is the Dow Jones. It's out of the weekly average true range channel. Every time in the past it happened, we got strong drop downs. That's S&P 500. It's out of the weekly average true range channel. That's the DAX. It's coming out of the average true range channel soon. That's why I said it still could push a bit higher. Every time it happened, history proved that we get strong drop down right after that. Again, I was wrong with my timing. In some period, you will see I was wrong. I was not wrong with my prediction and direction. Right now, yes, I am. I admit. I'm the first to admit when I'm wrong. The timing was bad. We're still pushing higher, but the level where it all started will be blown like nothing when the move begins. Remember my words. We will meet in several weeks or a few months, and we will reanalyze everything again. So again, if you are in like myself, remember it's only like an investment, which means no leverage, very negative leverage, and hold that until big profit is coming. That's all pretty much about the indices. Of course, I'll keep you updated as the weeks are going. Just one last thing for the DAX. For the short term, about the long term, I explained my view. I think the DAX is able to reach the 8,500s or maybe even a bit higher. That's correct. But take a look here. This is a daily chart. We have band to band move, right? And right now we have a convergence. Convergence on the top, but still a convergence, which means a bearish cycle is about to come. Going to the 4-hour chart, we have a continuing divergence. We have RSI around the top. We have more than 20 candles, right? So, and the divergence started right here. And then from this level, it was not tested. In my point of view, I would not be surprised if, first of all, we will get a small pullback to this range, like 80-hundreds up to 80-40 level, 80-50 maybe. Get a small pullback here, and from here the DAX will try to continue higher. On the short term, we might start the week with a small pullback before the continuation up. Be aware of that. That could be great opportunity for the short term. Now another great opportunity I see is oil. Oil is making very beautiful move. After a small correction, it's pushing up again. Now I would not be surprised if we are going all the way for duplication, which means around 97 plus could be good timing to look and to sell the oil. Of course, we will need to combine it with the divergences. Going down to the 4-hour chart, we already have band to band move with a convergence, right? With this convergence, after small pullback that should come at the beginning of the week, I think the oil is about to continue. 97 plus, 97 plus, sorry, is the level it should take us. From there, with the 4-hour chart divergence to create it, oil should start its pullback again to this trend line. In my point of view, down, up, then bigger down during this week, maybe even next week. If and only if 97, 50, 98 will be broken, then most likely the oil will continue higher. That's the only condition for that. Now, if you remember, I've been talking about several pairs that I think we have very good opportunities at. I was talking about Canadian franc on the previous week, right? If you remember here, and we got the drop down back to the trend line, right? Back to the supports. We got a beautiful move. I was talking about pound franc, right? right from this level, and I said 147 or alternatively a break below this support, and we get the down move. We got the down move. I was talking about the Euro Aussie around 128 plus. We got a drop down since then. So our predictions from the previous week were turned to be good. The only one still going is Aussie against the Kiwi. And about this one, again, in my opinion, we will first of all get a pullback. The pullback should take us closer to 123 or so. Then I guess in between, even in between 122 to 123.70, I think it will make a stop, and then most likely we will see another push down for the Aussie franc. So right now we have a daily divergence, we have a bullish weekly divergence, we have many supports there, we have 20 candles right on a daily chart. I think we are pushing up from here. We will get many news during the upcoming week, so they could affect this pair, of course. Watching on the chart, I think we will see a push up first of all, then it's going to stop somewhere here in this range and push lower again. So of course I'm staying with this pair. It looks good and no reason not to be there. Now if you remember, I've been talking some time ago about the New Zealandian against the Canadian, that it's good. This is a good pair to invest for a long run. Well, we start to see some moves. We're 100 points from the top. This weekly divergence is only a question of time. If you have swap-free accounts, hold your sells. Another pair I was talking about several weeks ago was the dollar against the ZAR. If you remember this one, right? We got a drop down from there. Now I think we will get pullbacks that will allow us to rejoin that, but the direction was and still to the downside. And another thing we talked about, natural gas. I told you 440, 460 maybe before the drop down. 440 turned to be the top, and we are back to 4 right now. I think we will continue lower. But right now we have to be careful because we have a bullish hidden divergence forming between these two lows. So from here we might see pullback first of all, and then continuation to the downside. Remember, weekly chart is still under bearish divergence. 20 MA of the weekly chart will be most likely retested. And now for the opportunities for this week. After the non-farm payrolls, we got zigzags actually. That's the euro dollar. We got a drop down, then a pullback, then drop down again, another pullback, and the euro dollar is zigzagging. It has troubles to break the 130. In my opinion, and the fact that the Draghi cut the interest rate and said that the ECB will keep open mind on a negative rate on deposits, I think the future for the euro looks bearish. In my point of view, every push up should be considered as opportunity to sell. Yes, the euro dollar is still able to reach the 132.50 again, or maybe even 133 plus, but the higher it goes, the stronger the bearish pressure will be on the euro dollar. Eurozone cannot recover while the euro is so expensive. It just can't happen, and that's why in my point of view the euro is going down. Of course 130 has to be broken on daily chart and hold below in order for the euro dollar to gain a bearish momentum. Right now it's still zigzagging. Same about the pound dollar. You know my opinion about the pound dollar. I said it not once, that 156 157 plus are the levels to go for a sell. We have a daily divergence. We have a weekly convergence. Right now the pair is building weekly hidden divergence. It still could play for 1, 2, 3 more weeks around the same levels, zigzag up and down, but here that's a top from my point of view. Here it's going to finish with the current up move, and from here start the down move again. Again, every push up is an opportunity to sell the pound dollar as well. It's an opportunity to sell the pound dollar as well. That's my point of view. Dollar Canadian will be the next one on the list. We have a trend line right here, as you can see. We have a band-to-band move right now. We got a small pullback. I would not be surprised if we get another push down right here. Just pay attention. We have many supports there, right? So starting from 100.40 down to 0.99, I would say this all a level to look for a potential buy. Look for a daily support trend line combination with the 4-hour chart divergence. We got it once. We got a pullback for 50-60 points, even a bit more. Right now we might push it lower to the next levels, and then to create the next divergence, right? To create the next divergence lag, and from one of the supports, no idea where exactly, but one of the supports is going to stop. It's going to create another low on the MACD, turn it up again with a positive slope, bullish slope, and with a bullish candle pattern. It's time to start and buy the dollar against the Canadian. Push back to the daily 20 EMA will be the target. Breaking below 0.99 will be a warning sign for this pair. That's a good opportunity in my point of view. Another interesting thing is regards the yen. I was talking about that, and actually I saw the dollar yen is about to start its drop down already. I admit, again, the timing here was not that good, but with all going around the dollar yen, it's very hard to predict something technical around these pairs. For the long run, the scenario was and stayed the same. We are playing around the top. There is a continuing divergence, RSI around the top, many resistances on the way, especially the psychological 100 that could be tested at the beginning of the week, maybe even be broken. Maybe even to be broken, but again, this bearish pressure is huge right now. Huge. Weekly chart and monthly chart all show extreme. RSI on monthly is going to closer and closer to the 80. This is very bearish sign. So again, for the long run, I am on the bearish side. For the short run, we might see a triple top here on the dollar yen, the daily chart, or maybe even new high. Dollar yen, after the news from USA and after what Kuroda keeps saying, dollar yen could push to 102, 103, and even 104 before the huge negative drop down to come. You remember my analysis and my compare between 1997 and the current situation. In 1997, 1998, the drop down happened because of the Japanese yen. Who said it can't happen again? That could be a reason to happen again. The clear decrease of their own value of their own currency could blow into the face of everyone selling the yens right now. So again, we still could push a bit higher. That's relevant for all of them. Euro, yen, pound, yen, everywhere we take a look. But the divergences are here. They are pretty heavy. We are playing it on the top. Still could push a bit higher, and a big cycle down for 1,000 points or so is about to come. Only question of when. It's not a question of if at all. So right now, I think we still could push a bit higher before it happens. I suggest follow this the current support line, which holds each of the pairs. Pound yen, it's around 150. Euro yen, that's around here, the 126, 126.50. Dollar yen, that's around 97. Follow this important support. They have to be broken in order to gain a real bearish momentum for these pairs. And on the short term, I would not be surprised to see another push up for this pair. But for long run, my opinion, as you know, based on weekly and monthly chart, that the cycle is coming. Again, it's impossible to predict when exactly the cycle will come and what will be the reason for that. But based on these charts, with some patience, it's about to come. So trade very, very careful here. If you have sales, you can hedge them with some buys, or full hedge, that's okay. And after the next divergence to create itself on daily and weekly chart combinations, close the buys and stay with the sells for the bearish cycle to come. That's my opinion about the yen pairs. My next opportunity is the Euro Aussie. Well, I've been talking about this pair already. You know my opinion for the previous week. But right now it's very interesting because it is following this trend line. A break below this trend line, a break below 126 actually, could open the doors for a really bearish move. This could turn to be a head and shoulders, and from here we might see a serious drop down, especially with the fact that Euro already cut the interest rate. Australia will announce on their cash rate this week. The expectations show that there will be no change, it will stay around 3%, but surprises happen in the past, surprises might happen again. Pay very, very close attention to that. So Euro Aussie break below 126. This will be a great call for a sell for a long term. I've been talking about the indices, you know my opinion. Another interesting pair, of course, is the pound New Zealandian. You know my opinion about this one based on the monthly chart divergence and a weekly chart divergence combination. It's only question of time until this pair flies. If you trade like investor and you have swap free account, from my point of view, if you buy the pound New Zealandian, that's a perfect sign. Yes, it could still go to 175, it could go to 165 even. That's all okay. Such divergences on monthly chart make pairs fly, and in my point of view, this trend line, the monthly trend line, will be tested, and that means we will have several thousand of points up move for the long run. Don't expect it to happen tomorrow or in 2 weeks. No, this is monthly chart, so it will take some time. That's my opinion, of course, about this pair, but you know that I've been talking about that for a few weeks in a row right now. Another great opportunities are coming from commodities. That's sugar, for example. If you remember my analysis several weeks ago, I've been talking about this divergence. This is clear up move ahead of us, but it still could push a bit lower. Again, if you treat it as investment, go and buy that and hold it. Go buy and hold it. If you want to make it conservative, then just follow the trend line and the resistance, and once they complete the break above 18, then you can jump in. If you make it like an investment, it's great time to buy. With sugar, coffee is making the same. Take a look, this is a monster divergence. It's only a question of time until it bombs up. On a monthly chart, that's a clear band-to-band move with a bullish slope. Every push down is an opportunity to increase your holdings on coffee. Coffee is about to fly up. When exactly, how exactly, no one knows. But if you want to play conservative, break above 145, 146 range. This will open the doors for an up move. And as I said not once, since from there, I think the coffee will go back to 185 at least, maybe even higher. So if you trade it like investor, hold your buys or make the buys. But trade like investor means you never use leverage. You use negative leverage and you hold your trade for a long run. Means being able to hold a drawdown at the beginning while it develops itself. Right? Well, I talked about sugar, I talked about coffee. Unfortunately, I don't have milk here to talk about, so no milk analysis for this week. Well, that's pretty much the best opportunities we have. As I said, Aussie Kiwi looks good for short-term pullback, mid-term pullback. Yen pairs together with indices look like they able to make another push up, and the timing for a short was not perfect there, but the direction is clear based on weekly and monthly chart. It's only a question of time. It is not a question of if anymore. It's a question of when exactly it will happen. That's all. We have the euro pound which we talked about on the previous week, and my opinion is still the same. We have the pound dollar and euro dollar looking to sell every rise. We have dollar Canadian to follow a great buy opportunity. We have the euro Australian. Of course, we have the pound New Zealandian. Well, a lot of opportunities, as you can see. Another great pair, in my view, is pound against the Aussie. I think this pair, based on monthly chart, of course, also is about to fly, but this is kind of like pound against the Kiwi. Right? It's kind of like pound against the Kiwi. So if you have investment and you don't pay swap, hold it for a very, very long run. That's a perfect trade from my point of view. Don't forget we have the oil, as we explained at the beginning, and the indices. Well, the main two, of course, first of all, the Swiss market, which from my point of view is amazing opportunity on the long term. We have the DAX that should push a bit higher, as I explained, based on the weekly here, as you can see, weekly harmonical pattern and weekly divergence to form itself, but the future does not look good, and I hope that the drop down will come soon. If not, you will remember my words, it will not end well. And I'm sorry again I sound pessimistic for the market. I'm not. I just follow the charts, and from my point of view, great sell opportunity is great opportunity to make money, not the opposite way. I don't want to sound sad about the future. No, not at all. The future is great opportunity to make money by shorting. That's all. So be there when it's about to start. It's certainly I was wrong about my first timing. I will not be wrong about the direction. It's only and only question of time. Remember Apple. Apple is the perfect example. I was talking about Apple to short around 500 plus. It went all the way and close to 700, right? And we all know where Apple right now. We all know where it had been a few weeks ago. So time only. That's all. That's all, friends, for this week. Thank you very much for watching this video, and I wish you a wonderful week. Good trading. We have a lot of opportunities, so enjoy them and enjoy your trading week. Yours, Vladimir Ribakov.